All right, today we're going to break down the professional analysis behind a company that some of Wall Street's sharpest minds think is, well, just dramatically undervalued. We're diving deep into a company called BitMine, that's ticker BMNR, to tackle a really simple but fascinating question. How come analysts are slapping a price target of over $50 on this thing when the stock is trading for about half of that right now? So let's get into it. Let's see if we can solve this puzzle together. Okay, so here's the deal. The whole point of this explainer is to dig into the logic behind this huge gap. What exactly are the pros seeing that maybe the rest of the market is missing? Let's find out. And boom, this chart really lays it all out, doesn't it? On one side, you've got the market price, just kind of hanging out around 28 bucks. And on the other, you have the average analyst target, all the way up at $53. Look, that's not just a little gap, that's a chasm. And just listen to the kind of language the analysts are using here. They're not just saying, hey, this might be a little cheap. The source material is emphatic, calling this a screaming undervaluation. That phrase alone tells you everything you need to know about their conviction. They think the market has made a huge mistake. So, where do we even begin this investigation? Well, clue number one is the absolute foundation of the whole argument, the company's treasure chest of assets. See, this analysis doesn't start with hopes and dreams for the future. It starts with the cold, hard assets the company owns, right here, right now. And this is the crown jewel. BitMine holds the single largest public treasury of Ethereum on the entire planet. I mean, look at this number, over 4.1 million ETH. That's not just a random number. It's the solid gold bedrock of their entire valuation thesis. Okay, so 4.1 million ETH sounds like a ton, right? But what does that actually look like in dollars and cents? Yeah, you're seeing that right. Over $13 billion. Right off the bat, this tells you we're not dealing with some small-time operation. This is a financial heavyweight. And get this, it's not just crypto. On top of that $13 billion in Ethereum, the company also has about $1 billion sitting in cash. This 1-2 punch creates what the source calls a fortress balance sheet. You've got the massive crypto upside, but also a huge cushion of good old-fashioned cash. Okay, so we've got these giant numbers, but how do we actually use them to figure out if the stock is a good deal? Well, that's where this key idea comes in, net asset value, or NAV. It's actually really simple, but it's super powerful. You just take everything the company owns, subtract everything it owes, and whatever is left over, that's the company's true intrinsic value. Think of it like this. If the company shut its doors tomorrow, sold everything, and paid all its bills, the NAV is the pile of cash left for shareholders. And this, right here, is the heart of the whole undervaluation argument. According to the analysis, BitMine is trading for about 20% less than what its assets are actually worth. Let me put that another way. For every dollar you invest in the stock, you're getting control of about $1.20 worth of the company's stuff. It's like buying a wallet for 10 bucks and opening it up to find 12 bucks inside. The point is, the market is pricing this company for less than its component parts are worth. Now, just buying assets for less than they're worth, that's already a pretty compelling story. But it gets even better. Let's move on to the second huge piece of the puzzle. Because the company isn't just sitting on all this stuff, it's putting it to work to make even more money. And this is how they're doing it. BitMine has already staked over 400,000 of its ETH. Now, if you're not familiar, you can think of staking kind of like earning interest in a high-yield savings account, but for crypto. By helping to secure the network, they earn a reward. So those assets are no longer just sitting there like gold in a vault. They've become active, income-generating machines. And this kicks off what the analysis calls a flywheel effect. And trust me, it's as powerful as it sounds. It's a compounding cycle that just feeds itself. Step 1, you stake the ETH. Step 2, that generates a yield. Step 3, that new yield gets added back to the main treasury. Step 4, that makes the whole asset base bigger. And then you just repeat the process. It's a self-reinforcing loop that just keeps growing the company's core assets, almost on autopilot. So why is this such a game changer? Well, this is the whole disconnect, right? The market is looking at BitMine and seeing, a big digital warehouse, just a holding company. But the analysts, they're seeing a full-blown operating business with predictable, high-margin, recurring revenue. And according to them, that's the big mental shift the market just hasn't made yet. Okay, so we've got clue number 1, the insane asset discount. We've got clue number 2, the income-generating engine. So what's the third and final piece of this puzzle? Well, according to the analysts, it's the lineup of specific events or catalysts that they believe are going to force the market to finally wake up and see the value. And man, the analysts point to a whole laundry list of them. You've got internal stuff like the launch of their new staking service called Maven and their steady weekly eSpies. Then you have the big picture stuff like that rising institutional ownership we're about to talk about and major tailwinds for Ethereum in general, things like ETFs and the growth of AI. The idea is that any one of these could be the spark that finally closes that valuation gap. Let's double-click on that institutional ownership point for a second. We're talking about 381 different big money funds that already own a massive 38% of this company. Now, that's a really big deal because this is often seen as stickier money from investors who are in it for the long haul, which really helps validate the whole thesis. And we're not talking about just any funds here. We're talking about the heavy hitters, the so-called smart money. These are some of the biggest and most respected names in the entire financial world. These are firms that do their homework, and they're putting serious capital behind their belief in this company. All right, let's put all the pieces together now. We've seen the deep discount on the assets, we've seen the high-margin income stream that's just getting started, and we've seen the list of catalysts waiting in the wings. So let's see how this all combines to form Wall Street's final verdict. And this is where the disconnect gets just glaring. The analysis points out that companies similar to this one often trade at a premium to their assets, meaning you pay more than $1 to get $1's worth of their stuff. But BitMine? It's trading at that deep discount. The argument is simple. As that staking income starts to really kick in, the market is going to have to reevaluate this thing and price it more like its peers. Okay, let's be real for a second. No investment is a slam dunk, right? And the main risk here is pretty obvious. The crypto market can be a wild ride. But the analysis immediately pushes back on that, pointing to all these things that help manage that risk. The sheer size of their treasury kind of creates a value floor. That $1 billion in cash is a massive safety net. The staking income keeps rolling in no matter what the price is doing. And that strong base of institutional owners tends to provide a lot of stability. And this all builds up to what might be the single most powerful line in the entire analysis. That $50 price target, it's not being presented as the finish line. The argument is that as that staking flywheel really gets spinning, $50 just becomes a fair valuation. It's the new baseline, the new floor, not the ceiling. So that really leaves us with the one big question posed by this whole analysis, doesn't it? When you take a company that's trading for 20% less than its assets are worth, and then you see that those assets are now generating their own income, and there's a clear roadmap of catalysts, well, does that $50 price target start to look less like a destination and maybe a lot more like just the first stepping stone?